Once again, my name is Keith Wayland from RPI Consultants. This is my colleague, Chris Gordon. This presentation is about Lawson Asset Management. We're going to dive into everything from basics to how to capitalize leveraging activities. Couple of housekeeping notes. One is we will be recording this session. It takes us 7 to 10 business days to get up and rendered to YouTube. But at that point, we will notify you, forward you a link so you can rewatch it. Also, we encourage questions. It definitely helps break up the dynamic. Lastly, you may be wondering why, if you watch other of these, I'm actually sitting this time. It's because Chris Gordon has let me sit in on this, which is very exciting for me, though I have promised to do 5% or less of the talking. So with that, I think we should go ahead and get started. One last thing. Big congratulations to Mr. Chris Gordon, Penn State graduate, long-time suffering Nittany Lion franchise.
Oh, yeah.
Beat the big bad Buckeyes on Saturday. It's probably the biggest win in the last 20 years of Penn State or more. So,
yep.
Okay.
So that's why we got to rep the Penn State title slide here. All right, so thanks for the intro, Keith. We're going to get started, and like Keith said, we're going to talk about asset management basics, from adding assets directly within the system, using asset templates to interface asset transactions from your subsystems, whether that's project accounting or accounts payable. Walk through that capitalization process through AC if you are using project accounting, and then talk a little bit about some of the asset management tips and tricks that I can pass on to you guys. So a lot of you guys, I don't know who's on the call, but we probably have a mix of people that have asset management already running, a mix of those that are not implementing, or just asset management sitting out there and they're kind of curious what it can do. So hopefully over the course of the next hour or so, we cover enough to make everyone happy out there. And we did do this presentation again, or before, and it won't run the full hour, so feel free to jump in throughout with questions. Don't feel like you're getting in the way of the presentation, because we encourage that. Okay, so like we said, AM basics, asset template, the importance of the asset template and how that drives asset creation within Lawson AM, capitalizing through AC, and AM tips and tricks. So that's where we're going. A little bit about RPI. We are a full-service Lawson consulting firm.
One time.
Founded in 1999. We got over 60 consultants across the country, and we're highlighting here just some of our
financial consultants.
This is all of our financial consultants here.
Yeah, there you go. It turns out that in the large footprint, finance is probably the smallest.
4 or 5.
Yeah. Sorry.
It's quality over quantity.
Yeah, quality. There you go.
Okay, so what is Lawson Asset Management? Well, it's an integrated module within the Lawson ERP. It sits just like AP integrates to GL, your supply chain integrates to your general ledger. This is just another module that integrates within Lawson. And with that comes some benefits. The AM module is going to perform asset functions related to disposing assets, adding assets, adjusting them, transferring them. So that maintenance part, those journal entries will be recorded within the AM system and passed along to your general ledger. And like we're going to look at over the next half hour or so, is generating those assets from subsystem transactions. The fact that it's integrated with AP and project accounting allows you to integrate and transfer those transactions into your AM subsystem, which provides a lot of efficiencies, so you're not just manually adding assets all the time. You can leverage the Lawson system to make that process more efficient.
I think it's an important thing when we talk about Lawson Asset Management that it's really about the accounting of assets, right? And we look at what it's not, what you're bringing up now. It's other things that might be related to asset, would have to do with tracking locations of the asset, or maintenance contracts and so forth, or times it's been serviced. And there's other solutions that Infor offers for that. Enterprise Asset Management, very robust solution, have been around for a long time, and I think that's a better solution for the true management of the assets.
Right.
So within the context that we're talking about today, it's really just from a financials perspective. Yeah.
Yep. So why would you want to implement the AM system? If you've not already, what's the value that you can get from implementation? Well, maybe you're maintaining a spreadsheet with all your asset information there, doing calculations outside of Lawson for depreciation. That can be a tricky process, and you might not capture everything every month if there are disposals or adjustments. That's kind of hard to keep track of in a spreadsheet. So why not just let Lawson do that for you, right? Just take that manual process out of your spreadsheet and put it into an integrated ERP system. The AM system allows you to depreciate on a monthly basis, and we'll get into the AM 180. So it's a job we run every single period, calculating depreciation for your assets and updating your general ledger with accumulated depreciation, depreciation expense, and life-to-date depreciation. So the system does it for you. Let it do it.
Yeah, and a great philosopher once said, tracking assets on random spreadsheets hollows the mind.
True statement. And I have a set and forget out there too. The idea behind that is you add your asset to the system, and you don't really forget about it, but you let Lawson handle that depreciation. You still got to go in there and make adjustments when needed and dispose of the asset when needed, but for the most part, you add the asset and you let Lawson do the work. And we will get into asset disposals and those journal entries that are created from that process. So I want to talk a little bit about just adding assets basically within, or quick additions within the asset management system. Kind of forget about the integration from AP and AC, and we're just looking specifically within the AM system, using this AM20 form and leveraging templates to quickly add assets into the system. So what we're doing here is we're going to AM20, we're going out to one of our templates, and we're going to dive deep into templates in a little bit, but essentially we're saying what type of asset are we trying to create? And we go out and grab one of those templates that represent the characteristics of that asset. And we'll give the asset a description, a tag, accounting unit information. And when we click the add, we're going to let the Lawson template, the asset template, drive the characteristics of that asset. Whether that's convention, method, the books that you have out there, all of that can be defined on your templates. On our items tab, and we're still on AM20, we have the ability to pretty much itemize what's included in that asset record. And we're going to talk about the importance of actually having that information on your asset. Some clients don't have item-specific records for that asset. It's more just here's one asset, quantity of one, when really there might be 50 different pieces that make up that asset. So we're going to talk about the benefits of actually breaking out that asset down to the item level.
And we have some questions about work in progress, but I think we're gonna handle them a little bit later when we're talking about capitalization through AC and so forth, right?
Yeah, we'll touch on the WIP,
Yes.
the work in process flag,
Yes.
when we get in. We'll actually probably look at it
Okay.
in the next couple slides.
Perfect.
So the quick addition is really there to allow you to leverage the asset template to quickly add an asset to your AM system. Whether you're still integrating through AC or AP, you have this availability, this option to add and leverage that template. The next option you have, so if you don't want to go AM20 and we're not integrating through AP or AC, you have the option of using the AM 20.2, 20.3, and 20.4 forms. And each one of those forms, you're going to add something different. So on the 20.2 form, we're putting in some asset descriptions. And on 20.3, we're putting in the items that make up that asset. And on 20.4, we're putting a book onto the asset so we know how to depreciate and record those transactions to the appropriate books. So on 20.2, we define companies, location, divisions, where we want that asset to sit, the type of asset, if it's an equipment asset or a building.
Which usually affects the depreciation that's associated with that,
Right.
with that asset.
Yeah, so the asset type is driving a couple different things. where we're booking depreciation expense, where we're booking, what general ledger account is that asset. So,
And the depreciation type is out of there too, right? Or is that?
that's on the book.
Okay.
The book's going to define whether it's straight line,
Got it, yeah.
full month.
Makes a lot of sense. Well, there is a question on which version of Lawson we're showing.
Sure. This is 10.0.7.
So, but I will point out that in terms of all the functionality we're covering here today, this
Pretty
is
much.
not 10.07 or 10 specific.
Yeah, it looks different because it's just version 10, not version 9.
Yeah.
But the functionality, and there's not a ton of enhancements from 9 to 10 within Lawson AM.
And we're not really focused on those here today.
Correct.
We're focused on the basic core functionality.
Yeah, so this is 10. Here's our asset AM 20.3, our items. And I just want to spend a little bit of time talking about the importance of having an asset broken out by item level detail. So you see here we have a PC server, that's our asset. Lawson generated a number of 11 for that asset. But within the asset we have a CPU, we have a monitor, we have printers, and we have that information stored, and the total cost of all those items create the basis for that asset. Now, one, it's better to have this item information in there from a reporting standpoint. You get to actually see what, you get better visibility into the asset. Two, when it comes to disposing of an asset, you now have the ability to partially dispose of this asset 11. Maybe you sold the printers. You can go into that asset and now partially dispose and just get rid of those 2 printers off of the asset. A good example too is if maybe there was a hurricane or a bad weather and some of your building's been destroyed due to water damage, or some of your assets been destroyed due to water damage. You have now that ability to go in and say, well, my entire asset's not destroyed, but piece of it is. So this item level detail gives you that flexibility to partially dispose.
And that's something that if you don't set up front, you can adjust later, right? As long as the totals all match up,
Yeah.
you can have this asset together and a future date, break it out, and then treat them individually.
Yep. So yeah, if you don't have that set up right now and you got that quantity of 1 at $1 million, you can always break that out and go quantity of 4 at $250. So you have that ability. You just need to make sure that if you are breaking that out, the total cost stays within the total asset basis. Okay, so that's your AM 20.3. Dates are also an important thing within the AM system. The date you see here on 20.3 is your purchase date. This is not your in-service date. Your in-service date is what's driving depreciation through AM 180. This purchase date is just flowing over. If you started this, if this asset was created from the rec to check through AP, then the PO date would come in for this date. If you're just creating a manual asset, you would be putting that date in there as whatever that purchase date is. And 20.4, that's the last step of this process. This is where we're adding our books. You can assign as many books as you need to your asset. We're tracking method, the life, remaining life on your asset, as well as your basis. And this state is your in-service state. So it'd be nice if Infor kind of pointed that out and said purchase date versus in-service date.
The in-service date is what affects the financial calculation.
Exactly, yeah. AM 180 is running and it's looking at your in-service
In-service.
date. Something to note is that you can't have a purchase date or an in-service date before a purchase date.
Which makes sense.
Right. Lawson won't even let you do that. So if you try and change that, or if you screw up keying that in, Lawson will say cannot have in-service date before purchase date. So notice these, you can totally come to 20.2, 3, and 4 to add an asset, but these are also the forms that you want to come to change or adjust anything on your asset. There's ability to mass adjust or to adjust down at the individual asset level. And this is where you'd come to 20.2, 3, and 4 to adjust at the individual asset level. So let's talk a little bit about transfers. The idea behind transfers is that you have an asset sitting on one company's books and you want to move it to another company. That is really, so there's 3 different things that you can transfer, 3 different characteristics of an asset that you can transfer. First being company, location, and then division. If you're a single company, you'll probably never use the AM30 transfer functionality because you're not transferring it to another company. And I'd say you can change the location and division back on the asset itself. So you don't really need to use the transfer functionality for that. You can just go back to your AM20 form and switch up the location and divisions here. So really the theme there is that transfers are there for the multi-company customers, and it allows you to transfer an asset off of one company's books onto the other. And a question we get often there is, well, what happens to depreciation when that transfer takes place? The asset cost and accumulated depreciation will go to the new company, and all future depreciation expense is going to come off of that new company, which makes sense. The existing year-to-date and life-to-date depreciation will stay in the original company. For reporting, and because all that depreciation happened on the original company, you need to have it stay there. Okay, so there is a difference between adjustments and transfers. Adjustments is pretty much changing anything on the asset other than company location, or really just company. Sometimes when you're doing adjustments, journal entries might be created if you're switching up types, if you're changing accounting unit groups or something like that. So Lawson will, depending on the type of adjustment you're making, Lawson will create those adjusting journal entries when the adjustment happens. All right, disposals. So the asset needs to get disposed for whatever reason. Maybe you're donating it, you're selling it, it got damaged. We have the ability, like we saw before, to partially dispose assets. And remember, we need to make sure that we have either a asset with a quantity greater than 1 to do a partial disposal. Right? Lawson's not going to let you have a half of an asset. You got to make sure you have quantity greater than 1. And if you do want to maintain that asset down to the item level detail, that will allow you to dispose of the individual items. And that comes back to how you've set up your asset. There's a mass disposal program, AM40 or AM145. So if you need to dispose of assets, 50, 70 assets at a time, there's that ability through AM145. Or you can do your quick disposals off of AM40. And these disposal programs will recalculate depreciation. So we're going to get into an example in a second to show you what we're talking about. So I'm on AM40, I dispose of an asset, Lawson auto transfers me to 40.3. If there are any proceeds from that disposal, we can enter that here. The 100 and 500 are manually entered. Right? Lawson doesn't know if you're making money or if there was an expense associated with that sale. So this is something the asset accountant would be coming in to enter. Proceeds, expenses, so if there's marketing or whatever associated with the selling of an asset, we want to capture that in here. And we're going to talk about depreciation in just a second. So we do have a question, what's the key difference between the quick addition and 20.2? Good question, because both can be used to create an asset, but 20.1 is your quick addition. And it's just that, it's one form, you're leveraging your asset template.
But it requires a template is the difference, right?
Right, yeah, the 20.2, 3, and 4 does not require a template because you're keying all that information, whether it's the book, the items, or whatever.
And the template's tying it to that book and that asset type. Correct. And so forth.
Yeah, if you have that. So one thing to remember is if you have a template, you don't need to have all of the template information filled out. There's only a few required fields, and book isn't one of them. So if you are using quick addition and using a template that does not contain book information, you need to go out and add it after the fact.
Is there some best practices for how you set up asset templates? I mean, you wouldn't want to have 1,000 of them, right? And
Yeah.
you want to make it easy to find. What do you recommend?
Right, so we're going to get into asset templates and talk about best practices and strategic template creation. But that's a very good segue. Let's talk first about disposing of an asset in a different period. So let's say we're in current period 9. A Lawson will allow you to dispose of that asset in a prior period if you need to. And it'll calculate whatever depreciation needs to be removed from that disposal. So let's just walk through this example real quick. We're in period 9. Depreciation on a month by month is $100. So we got $900 worth of depreciation expense year to date. We got $2,100 life to date. And we're saying we want to dispose of the asset back in period 6. So 3 periods before. The asset's got a full month convention, and now that we're disposing it back in period 6, really only $500 worth of depreciation should have been calculated through 1, 2, 3, 4, 5, using that convention, the full month convention. So when we go to dispose of that asset, Lawson is going to reduce the depreciation expense from $900 down to $400.
Is that going to post in period 9?
It'll
that
post
difference?
in period
9. Unless you open period
Yeah.
6, Lawson isn't going to let you put the backward stuff. So
9.
yeah.
And then year to date and life to date will be brought down by that same amount too. So $1,700.
But that differential is going to go against the disposal account, basically.
Correct. Yeah. So just the takeaways here are that you can dispose of assets in prior periods, and Lawson will perform the necessary calculations to make up for whatever depreciation was lost there, needs to be adjusted. All right, we won't spend a ton of time on this slide, but from a high level, what is depreciation, that calculation looking like? What's Lawson doing when it comes to running the AM180 and calculating depreciation? So there's kind of 4 steps here. 1, Lawson needs to compute the annual depreciation for the asset. So in a straight line example, we're taking the basis, and if this is a first year asset, we don't have any life to date or year to date depreciation. It's dividing it by the life in months, and then by 12 to get your annual depreciation. And then it's taking that annual depreciation and prorating it based off of your convention. Again, if this is a first year asset and you don't have any, you're not putting this into period 3, you're putting it into period 1, Lawson would just take your annual depreciation and divide it by 12 to get your first year depreciation. And then it'll take that first year depreciation, divide it by the year to date depreciation, if there is any, to give you the remaining amount to spread over that year. And then divide that number by 12 to get the remaining amount to allocate across the remaining open periods in the year. So there's a lot going on here. But
And really where this comes into play is when you're converting from another system and you're trying to do that reconciliation.
Right.
This formula becomes really important to understand how that calculation is occurring and why that remaining, parallel depreciation calculation isn't matching what's in the company, because it's almost like catching up to what it feels it should have been for the year.
But it might not be exact.
It might not be exact.
Might be your culprit right here.
Yeah.
But everyone's going to get the slide deck, so if you do want to look further into this.
It's also a KB article, I believe, that Lawson has. So
it is.
It's not hard to find, but yeah.
All right, so let's talk more about the asset template. We kind of saw it back on AM20.1.
Yeah.
We know that we need asset templates if we're interfacing assets from AP or activities. So let's just kind of make sure that everyone's comfortable with what these asset templates do and how they can be configured.
Before we get into that, looks like we have a question on whether it's possible to default the depreciation method in 20.4. Special questions light here that Mr. Getty has.
So yes, you can, if you have let's go back to 20.4. All
This
right.
might be easier to see.
So you want to default the method, the straight line method on, yeah, so at the book level you can set up the default method. I think the book is AM0 something. I'm not sure the exact form number, but at the book form you can,
And it'll default in when you select the book, basically.
yeah.
Sorry, I hope that answers the question. Got to get some energy into assets here this morning.
Yeah. All right, so asset templates. Let's bring
Yeah, there
some
we go.
energy into
Awesome.
it.
All right.
It's a tool that we bring, that we create to default asset information onto a transaction. Used on AM20. It's also required if you're interfacing from 20 or AP or AC. Here's this is a spreadsheet that I've actually used for a previous client. It's not exact, but the idea here is, you want to create these asset templates strategically. There's kind of a balancing act of too many asset templates and not really using them all and not having enough. So you want to take a look at your asset types, the lives of your asset, and try and create this template based off of the information that you have.
And remember, sometimes these things from the subsystems, you're asking someone in purchasing or AP to make a selection, which can be edited later, right? But
Yes.
when you're going to go create it, but you want to get a high rate of accuracy, so you want to make that template name as self-evident as possible.
Exactly. You don't want to have just random, template numbers and someone who's not familiar with that.
10000.
Exactly.
10001. Yeah.
So a way to overcome that, and we're going to look at the rec-to-check flow, bringing in assets from AP, but requisitions can get coded with templates, purchase orders can get coded with templates, and invoices can get coded with templates. And like Keith said, a requester might have no idea how to categorize what they're trying to order. A buyer might not even know that. So we recommend having just a generic template out there. That is a way for you to catch and ensure that a transaction, a capital transaction, is caught and interfaced into AM. Once that template's on there, we're going to make sure that gets into
Well,
AM.
and I think an interesting thing is you have generic capital template, and there's no book, there's no method, there's no life, so nothing's going to default without intervention. So it's a nice thing to sort of catch that and not let it fall through the cracks.
Yeah, so if you were going this generic template route, and this is just a good example to prove that you don't need to have these templates fully built out, you want to look at them and maybe you have 5 or 6 different books, but you're not using them all the time, so maybe you don't want to default 5 or 6 books onto every single asset. So you can set these up with as much or as little information as you need or as works for you. What we do here with this generic template is just put a period right before it, a little trick to say if a requester or a buyer or an AP clerk just does a drop down on that asset template, it's going to be the first one that they see. So we can always say you don't necessarily need to train your buyers or requesters on the different types of templates. You can say just pick the first one. And then we're going to let our asset accountant figure out how that should be classified when that does get interfaced to AM. Okay, so we have account groups, which are just defining how Lawson books different journal entries for asset additions, disposals, proceeds from those disposals. As you saw back on AM40 when we showed you the journal entries there, the accounts flowed in from these account groups. So what's nice within AM is the fact that you set up all this default information and there's not really a lot of manual intervention. An asset gets coded with an account group, an accounting unit group, and it knows what accounting unit and account to book when you're disposing or adjusting or adding your assets. Let's walk through the flow. So this rec-to-check flow, we're bringing in assets from our supply chain NAP system. So let's just show you what that looks like. At the rec level, the requester can code an asset template. And what we have here is just the generic template on there. The requester has no idea what they're ordering, what type of asset it is, and they've just coded a general.
But if they knew, they could put it there.
Absolutely. If you got really good requesters and really good buyers, or if you just create some sort of crosswalk for them, they can absolutely code the correct template on there. The rec gets turned into a PO. The buyer still has the ability to change that asset template if they need.
Or add if it's not in there.
Or add if it's not there, yeah. There's different rules. If you are working with Smart Office, we can default different rules to say require an asset template if we're coding to the CIP account or an asset account. So there are controls, and that is the biggest thing, is making sure that, it's hard to catch every single capital transaction. But there are controls, whether through Process Flow or Smart Office or Design Studio, that you can implement to make sure that you catch every one of those. And then, so the invoice comes in, AP codes the invoice, and they don't have to code that asset template if it's been coded on the purchase order. So they're just running through their normal day-to-day. They match up this invoice back to the purchase order. And when that match is complete, that transaction gets interfaced to asset management, lands on AM15, and it's filtered based off of that asset template. So
do we know what pushes that out to AM? Does it happen the minute it matches, or is it like the AP 175 or something that pushes it out?
The match creates the AM record.
Gotcha.
And for non-PO invoices, it's a release on AP 25 or AP 26.
Got it.
Okay, so those, depending on the type of invoice, two different triggers that interface that to AM. But it's going to land here. Coming from AP, any interface transaction is going to land on AM15. Your asset accountant's going to be working, this staging platform. We don't have an asset yet. We just have transactions that are in this pool that your asset accountant needs to look at, decide when to capitalize, and then you'll have an asset, a depreciating asset.
So you could take multiple transactions, code it to the same template, and create one asset from them.
You can. Yeah, so there's, we're going to get into the combine functionality over here too. But you can have 10 assets coming, or 10 invoices coming from AP, combine them up, group them, and create one asset based off of those 10 invoices. And the nice thing is that you're going to have 10 different items.
Could be leasehold improvements, and you got a couple different contractors and some materials.
Yep. So this is just a staging platform for your asset accountant to work. They come in, so say a generic transaction comes in here, your asset accountant knows how to code that, maybe based off the vendor and invoice. They have the ability to override that template and say this should be fixed equipment, 15-year life. And if you have a template out there, you can just change that row to say use a different template. And it drops off the generic template and goes into the correct way to categorize. All right, so we totally touched on this a minute ago, but the PO invoice comes over at the time of match on MA43, and the non-PO invoice comes over if you're using batch control on 25 or authority code release on 26.
I keep skipping ahead to the punchline.
What about if AP forgot to add a template? Or what if purchasing forgot to add a template? Can AP do that? So the answer is yes. Off of the AP distribution line, there's an asset management button that you can click. That'll bring you to AP 22.2. And the AP accountant or clerk can enter a template directly on that line. So all is not lost if the requester and buyer do not enter that template. But at the same time, AP is usually busy. It's hard for them to catch that type of invoice coming in. So you might want to give them a heads up to say, hey, look out for this vendor, this invoice. Add a template on there when that invoice comes in.
Got a couple questions going on here. One question is it AM00.2? I don't have memorized if that's what that is. That should be used to set the default convention for a book.
Yeah, that sounds right. but I don't have the forms.
Yeah, we'd have to
It's
look,
one
right?
of those.
Is there a way, this is a great question, to default the generic template to all these transactions that are coded to these asset GL accounts? And
The answer is no. So it'd be great if you could default a generic template onto all POs. But you'd need to, there's a lot, the variables there are the GL accounts, right? If it's your asset accounts or if you're coding it to a CIP account. Unfortunately, for the template, there's not a way to require on those types of
though I do think
records.
if Stout was here, he would say that maybe
But it's totally
IPA
possible.
could be used to do that, and you could just have it run and say,
Yeah.
wherever it's missing, add it in.
And we've done similar flows for that to go out and look at PO lines and drop on asset templates if it's missing. The next, what we're going to look through in the next slide is capitalizing through activities. And what you're proposing here is totally doable within activities. Instead of requiring an asset template, we're requiring an activity. So if you're using your CIP account or an asset account, you're not allowed to release that purchase order or rec if there's not an activity on that line that's hooked up with your CIP.
So we got a great question here that I don't know the answer to, but I want to throw some stuff out there to make it all crazy.
What is the fix if the purchasing department uses an AM template and the asset doesn't meet company criteria to be capitalized and needs to be moved to expense?
Now, in the AP distribution, AP 30.2, you could credit the template and you could expense it in the correct place, and that would get the source transaction
Correct.
to be lined up. Then you would have sort of this negative transaction coming into your asset template, and you would.
You go to
Can you-
AM15 and delete that
delete them?
transaction. So you would, yeah, if there is a template on that record, it's going to get into AM. And if it shouldn't be there, then you can just delete that interface transaction off of AM15.
But you still have the coding of the invoice to the asset account. You got to take that back either through a journal entry
Yeah.
or the AP
Or
distrib.
through AP30.2. So yeah. And that is something to point out on AM15 is that you can just delete those records and there's, no one's the wiser. You gotta make sure if you're doing a line action row, if you're putting something on hold or changing something, that you're really careful there because there is a delete line action, and if you click that, that record's gone, and you have to go back and manually add that. All right, let's talk about AC or project accounting or activities or activity management, whatever you want to call it. Essentially, the logic's the same. We're coding recs, POs, invoices, but instead of coding them with templates, we're coding them with projects or activities. And the benefit here is the ability to track all those costs in your AC ledger or AC module, and then maybe these are CIP costs that we're tracking. And once that project is closed, interface all of those transactions to asset management to create an asset. So we're going to walk through what this looks like, the benefits of using AC.
So what this lets you do is it lets you have an account, like a construction in progress, work in progress, that's capturing these types of transactions. And what the activity lets you track is what subset of those belong to this specific project.
Exactly. So you can build out AC however you want. If you only want to track CIPs, you can do that. If you also wanted to include one-time capital purchases, you can do that as well. It really just comes down to what do you want to see in activities and how do you want to capitalize.
Okay. Let's wait a second. Roll through some more slides here. Yeah.
It's great that we have good questions, but let's keep moving. AC, so we're tracking expenses, costs in this AC module and interfacing to asset management. What's nice is the ability to add your capital budgets. So even though we're tracking costs, we can also load capital budgets to the AC module and track all of our projects. Commitments if we turn them on. As a rec or a PO is created, we can see that, have that visibility into commitments against projects. Commitments can register against budgets, and you have a lot of different reporting and analysis types of of things within AC that'll allow you to show that actual versus budget, commitment versus budget. So there's a lot of integration from all of your other subsystems into AC, but we also see this AC to AM integration through AC 160. So as you're accruing these costs for your CIPs, that project close, we have the ability to move that cost into your AM ledger to create a depreciating asset. What's nice too is the ability to say, okay, I have requesters and they're requesting different things for different projects. I can limit what they're allowed to hit. Mm-hmm. What projects are they allowed to hit? And it's set up on RQO 4.2, and they try and code for a different type of activity. They're not allowed to do it.
All right.
Let's get to
we got some animation here finally.
We do.
Break this up.
So we have the accounting from the invoice entry all the way to creating an asset, with AC kind of right in the middle there. Invoices come in coded to our CIP account. AP 175 is going to debit your CIP, credit your liability account. Next step, invoice gets paid, takes away that liability, and credits cash.
Cash is gone.
Now that transaction, that invoice is sitting over in your AC system, if it's coded with that activity. And let's say we're now capitalizing that activity, or that cost. AC 160 is going to clear out your CIP account and debit your asset clearing account. So now at that point, instead of that asset sitting on AM15 like it would if it came in through an asset template in AP, it sits on AM15.3. Or yeah, 15.3. So you have that distinction between what's coming in through AP and what's coming in through AC, if you are using both.
Which is not best practice.
Not best practice, totally doable, but I'd recommend picking away.
Consistency usually is a big part of keeping these processes.
Yeah.
And then
the greatest part of all is the creation of the asset. So we're debiting our asset account, crediting our clearing account, and we're left with just an asset on our books and cash out the door. The AC 160, so let's talk a little bit about what this does, how we can set it up. Like we said, we're accruing costs on a project. We run AC 160 to move that project into our AM system, start depreciating it. We run this wide open for activity groups, individual projects. We want to say, do we want to only specify a specific account category to capitalize? Whether an account categories kind of represent different costs within your projects. So you can have that full activity and say I want to capitalize the entire activity, or I can say I only want to do part of it, the land improvement part of that project. So flexibility there. Post to AC and the post to account category is just saying when I run AC 160, and these are totally optional fields, do I want to post what's been capitalized in this run back to my activity? And we're going to look at a report that shows you, if you have this set to yes, what some of your reporting looks like. It pretty much just credits.
it helps you track what's been. Yeah.
It helps you track what's been capitalized. It'll just show up on your reports as a credit to that one Cap D account category, or however you set up your account categories. And again, it just gives you visibility into what's already been capitalized. You can also do this by account category lists or groups. So if you said I want to pick 3 or 4 different account categories and capitalize all those, you can absolutely manually define these lists on AC 05.2. Before I run AC 160, I got to do some things. I got to make sure AC 190 is run to post all of my invoices, all my expenses to my activities. Just like you're running GL 190 to post journal entries to GL, AC 190 posts all those to your activities. Next, I got to change the activity, the project, to say I'm now allowing this to capitalize. So there's different statuses that we can put on these activities that will govern what you can and cannot do. We change the status to allow for capitalization. This is just showing you what those statuses look like. We have a capitalized status, with the cap flag just checked off to say all this status can do is capitalize. We got to make sure that the account category itself, right, that cost, has the ability to capitalize as well. Set that up on AC06, make sure the cap flag is set to yes. And then our templates come back into play. So these templates aren't just AP specific. When we capitalize from AC to AM, we need to put a template on there too. And that's put on AC 10.3, which will, drive that asset and define those characteristics of the asset when it gets into AM. And the last step, we just saw the accounting here that AC 160 is doing. It's debiting whatever that asset clearing account is. And we have different codes set up, so you can have multiple asset clearing accounts if that's how you're doing it. And we're debiting or crediting our CIP or WIP. That brings me back to the question we got before. So the WIP code, it's different than what we were looking at here, but we got a question before, what's the WIP flag used for?
And do you need activities to use it?
You don't actually. So the WIP flag, if I'm reading correctly here, is a flag on the asset, on AM20.2, I believe. That what it's doing is saying, this is a work in process, this asset. It's not going to be included in depreciation.
It's not in service yet.
Not in service.
I'm still adding transactions to it.
Stuff's happening.
And I can add new transactions that come in, new invoices from the contractors for the leasehold improvements.
Absolutely.
So it's ready. So it's like a hold.
It's a hold. It's a work in process. You can use a lot of reporting out there. You can go back and track what's set to WIP. But it's just a hold on that asset.
Hey, let's hit up another one here. If AP forgets to attach a template, is creating a manual asset the only solution?
Not necessarily. It depends, I guess, where you are in that step. So let's say I'm an AP clerk. I put in my asset or my invoice, forget to put an asset template in there. Maybe I've not released the asset or the invoice yet. I can go back and put that in there.
But let's say I have released the invoice.
Then yes, you're going to want to.
Because by the time they find this, so they're finding it because they see something coded to the asset.
Yeah.
Right. So the invoice has to be released that doesn't have a corresponding.
Yeah, so you just want to manually add that on AM20.
There's no way to go into the AP distrib and then do a little
Sure there is.
tinkering there, do like a change and add a template and.
You might be able to do that on one of the invoice maintenance forms. I'll have to check that. So Bill, let's.
See, I'm here for the creative element. That's what's up.
It would make sense that you could go back and add a template on an invoice.
If it's on the distribution, if it's one of the fields that are available, yeah.
Yeah, I think off 30.2 you can add.
Like a little.
Yeah.
And if it lets you change, then maybe it creates it at that point.
It would have to be at that point, yeah. As soon as you add that template, you'd see it in AM15.
That would be cool. You could try it. You could try it at home as well.
Yeah, go into test. See if you can do it in your test system.
Take that released invoice, AP20.2, hit the AM, try to add a asset, make sure there's a change, hit change, and if it works, it'll create it right at that point.
Yep.
So, end of test. Cool.
Another question?
Yeah, it's a little bit more complicated here. Is there a report that can be run to get GL data keyed into 20.5 by asset number? This is needed for reconciliation to verify there were no keying errors between the
20.3, 4, and 5.
I thought it was .2.3 and .4 that we went over.
Yeah, so the 20.5 is that form that pops up if you have display journal entry set to yes and shows you what Lawson is creating.
And you can override that?
And you can override that if you want.
Okay, but is there an auto flag so that you know somebody overrode it?
Not that I know of.
Okay.
Not that I know of. Is there a report that can be run to get GL data keyed into 20.5 by asset number? So you can always just query your AM asset. I'd have to figure out, it's probably your AM book. I'd have to figure out the exact table. But you can, if it's on 20.5, you can get that data through a manual query.
And just compare it to what would have defaulted in, and if it's different, then you know.
Yeah, there's a little bit of work there, I guess, to get you what you want, but it can be done. All right, some tips and tricks. We got 10 minutes left, so if there are questions, we
Keep them coming.
Keep them coming. We looked at AM15, and we saw that combine field. And like Keith said, if you got 10 or 15 invoices coming into AM, you want to combine them all into one asset, you totally have the ability to do that. You need to add this combine field, and this is a user-defined field. So you type literally whatever you want in there, and assets with that same combined field will group together. They'll be grouped on, once you group them, click change on AM15, they're going to leave AM15 and move to AM15.2. This is your combine invoice interface. So it's showing you based off that template still what you've grouped. Display all, in this case just 2 of them here. But you can have as many grouped invoices as you need. There are some characteristics or qualifications that need to be met for that grouping to happen. Asset description needs to be the same for all of them. The template needs to be the same for all of those invoices. Location, division, I think books might need to be the same. So there are, if you try this and you get an error message, it'll tell you, location not the same or company not the same. So there are some governing rules around what you can and cannot combine. Another cool thing is the ability, if you're tracking everything in AC, to append those AC costs to a pre-existing asset. On AC 160, you can say, or on AC 10, when you're about to capitalize that project, on the Adjust tab, you can say, okay, I have this additional cost, but this really should go onto one of my pre-existing assets.
How does it handle the depreciation for that?
So there's options here. You can either compute depreciation or not. And if
Which means it'll go into the in-service date and just catch it up on the current month?
Yeah, if that's set to yes, it'll do your catch-up depreciation for you. Add, obviously, that cost to the asset basis, and you'll be depreciating that full amount going forward.
That life to date will happen at that point.
Yeah.
That catch-up.
Yep. So that's a nice feature. We have asset groups too. So as you are creating assets, if they're assets that are similar and you want to group them together, this really drives reporting. It drives processing. So you can run AM260, AM180 based off of the asset groups. It just gives you, you have a million assets out there. It gives you a way of grouping assets into similar buckets. Some other tips, we talked about that generic template. So if requesters or buyers don't know what they're buying, just put that generic template out there, fill it out with your company, maybe, I think company is all you need, and then have your asset accountant work that as it gets into AM15.
How did you get it to be the very first one that showed up?
Put a period right before it.
Right, so it's alphabetical, and
Yep.
you sort of trick the system to make sure that it's the first one. They're not having to hunt for it, they know it's out there.
Yeah, instruct them to pick the first asset template that they see. Much easier than having them hunt around.
Yeah.
Choose your route, AC or AP. How do you want to capitalize? There is no Lawson restriction of using both. You can absolutely bring in, maybe you want to do all your one-time capital purchases via your template, but also track your CIPs in AC. Totally doable. You just got to make sure that you got the controls and training around both of those processes. AC 160, you have that ability to pass a credit back to activities to see what's already been capitalized. I recommend doing that. There's also a report out there, a capitalization history report, that will show you, based off of the project you select, what's already been capitalized. This will show up pretty much in all of your reports and analysis. And get smart about your asset templates. So don't just throw in an asset template for one-time template you'll never use again. You don't want to clutter up your asset template library. Make sure they're strategic. You're smart about creating those, and that'll pay off down the road. Your AM260, your asset report, just a quick note here. If If you set this to preliminary closed yes, you run AM 180, you can come back here with that set to yes. This will give you a snapshot of what your AM subledger is going to look like, including that depreciation that AM 180 just ran. So we recommend doing this before month end. Run AM 180, come back here, run this with prelim set to yes. And before you close, you'll be able to make sure everything looks good. And it'll give you that opportunity to make any adjustments before the period is actually closed. And last but not least, we have our AM 260 report. You set the type here to yes. It's going to group all of your assets in summary by type. And then that gives you a really easy way to compare back your AM asset type balances to what's sitting in your general ledger. So run that by summary. You see asset flag set to yes. Just run this report with type set to yes. And you'll get that grouping. And here's that AC 160 we were talking about with the post back to the credit back to the activity. Remember we saw that cap D that we put in on the AC 160. That account category shows up on, in this case, our AC 410, showing that we've depreciated or capitalized $120,000 worth of that project. And we see that we have $95,000 remaining.
Cool, so we do have a question here. If I go back and change the life of an asset, will it do a catch-up all at once on depreciation, or will it just recalculate through the remainder of the life? And I think this is where that formula comes into play, right? So when it runs through the calculation, it's going to say how much depreciation is remaining, how much life is remaining, and it's going to calculate what it should be from there. It's going to make an adjustment for where you are from YTD, so it'll catch up the year. So it's not going to depreciate all at once. It's going to happen throughout. But say you're in like the last period of the year, that period might have a spike, or you know,
and that
or a negative even if you extend the life.
Right. The compute option is important on in this type of scenario. It's saying how do you want to catch it up? Do you want to catch it up and book it all to current period? Or do you want to catch up depreciation and spread it out over the remaining life of the asset? So that compute option set to yes or no will do one of those.
Well, you're talking about the append.
No,
or just in general?
If you're adjusting life of an asset, that compute option will.
We have confirmation that you can add the asset template in AP 30.2. Thank you very much. Is there any dashboard reporting available for AM?
Not out of the system, not out of the AM system. And I guess when you're saying dashboard reporting, you're looking for maybe asset lists with remaining life and depreciation and things like that. There's reports, AM 270, AM 260. That's probably the closest you're going to get to a dashboard report. But without knowing exactly what you're looking for, it's hard to answer that question. But there's not necessarily an AM dashboard that you'd be able to see.
Right. I mean, I think that there's various tools to create dashboards with, and as long as the data's in the system, you can come up with them. Maybe you want to track. I got stuff that I have in WIP, transactions that have been in activities for a long time, in CIP that haven't been capitalized. I mean, probably most dashboards are exception based, right? Mm-hmm. Is to try to show you stuff you should be looking at, and maybe volume. So I could see some of that. Let me ask you a couple of quick questions because we got to wrap up here. I think one of the things about asset management that we look at it works, been around for a long time, functionality is basic and core, and it's really easy to roll out. I mean, when you look at a typical asset management rollout, it's really about training and configuration, and then there's the conversions, which obviously that can be complicated if there's a lot of different manual spreadsheets and so forth.
Where that data is coming from.
Or where that data is from, it could be pretty simple. And usually that first step is to get up and running. Then you have asset template creation. Asset template creation can also be pretty simple because there's some defaults you can start with and modify from there. And then there's that next step of setting activities to capitalize. And again, I mean, from a system functionality perspective, this is all real easy to set up. So it's all about
training.
Yeah, training, process.
Making sure the conversion goes
How do you communicate that we're doing this today? Yeah. But from a system functionality, this is all real basic stuff.
Totally. Yep, and depending on where I know we're right at time, but depending on how you want to go about creating those assets, whether it's from AP or or AC. There might be involvement from buyers and requesters along the way too, if you do have that business process change to say, hey, now we're requiring you to put a template on.
Is that where you do a session in front of a whiteboard and everybody throws a rolled up piece of paper at you and goes, boo?
We don't want you here.
We didn't ask you to give us more work. Yeah, so anyway.
So there's just a little bit of change when it comes
Consulting
to,
is fun, yeah.
but that's the joy of it.
Yes, there you go.
Can you create an Infor Business Intelligence? I guess that's referring to the dashboard.
Yeah,
So yeah,
yes.
you totally can. And we have an IBI webinar coming up in December, first week in December, I believe.
Okay, so I think with that, we're going to go ahead and close this up. Definitely appreciate all of you attending, all of you still here. Thank you very much. We have more webinars. Coming up today. Contract management, P-card integration. Chris Gordon will be back. P-card integration, pretty interesting one. Justin Braun's going to do that. And we have a whole nother set we're going to do in December. Hopefully you get those emails, but you can always keep up to date on rpic.com/webinars and our digital concourse page. So if you go to Work Out Loud. If you go to Work Out Loud, digital concourse, and sign up there and track our page, you'll also know when these are coming up. Hope you enjoyed it. Thank you for your time.
Thank you,
Chris.
Thank you.